What's going on, penny boys and gals? What's going on, Stockters? And welcome to our Thursday, 5 p.m. Eastern charting live technical analysis live stream with myself and our technical analysis wizard extraordinaire, Mr. BTCJ. How we doing, Jay?
Doing okay, man. How are you doing?
I'm doing great. I'm excited for today because I've been blessed with the role of updating and posting on social media as well as the Discord about all these plays that we talk about in the blog that you are typically the one doing. I think we have around 20, I think it's 31 open plays. You've done the technical analysis for 29 of them. So
Nice.
basically there's two that was done by other analysts. These are basically all your plays, and so far we've been hitting some pretty great ones. We had Google, which was a nice and easy swing trade. Simple 11% TKO, same deal. McDonald's was another one. We got lucky with DWAC and the save off of news. Of course, DWAC with the Donald Trump news brought us up to a potential profit for those of you who held to Ethan's target of over 250%. And for, of course, the more realistic target, which was our targets, we were looking around like 25%. Spirit Airlines is another one we got lucky with the short, which they had some news come out about the JetBlue
Right, I need you to hold on there.
merger. Yeah.
Stop saying that we got lucky, right? Stop referring
Well,
to
there was
news,
some news.
right?
There was some news. Let's be honest. That could have gone either way. With if Donald Trump's election results went the other way, it would have been the other way.
I disagree, man. Like it's all premeditated, bro. It was calculated in the analysis, my man.
You look at the charts. You're like, you know what? In a month from now, Donald Trump's going to win the primary.
How is it possible though that we're lucky on everything almost?
Well, to be fair, DWAC actually wasn't one of yours. That one we did get lucky on. It wasn't yours.
It was absolutely, yeah. I didn't want to say it, but I have nothing to do with
that. Spirit Airline. I don't think Spirit was yours either. To be honest with you, yeah, the two big news ones are those are just random newscasts we got lucky on. I think the Spirit Airlines was Pookie, which we got for a short down to around 50%, and DWAC was that crazy one. But yours was McDonald's, TKO, Google, all very. Those are the three to me boring swing trades. So those hit entry, and then they just kind of like I had to wait there for like a good 20 days to a month, and then they just kind of slowly made their way to target, and then there's no big dips and no stop losses hit. It was just a simple move up. TKO had a little dip below entry, but not below stop loss. And to me, I'm used to I'm a DJ in our heart. I like to day trade my options. I'm used to these vicious swings up, swings down. My adrenaline's always going with these trades. I was like, Jay, like this is so boring. You're like, just wait and see. And I did, and here we are a month later. We're up huge on this this blog portfolio, and whether it's McDonald's, TKO, Google, or any of your crypto plays, you're just definitely proving the strategy not only works, but as boring as they may be, we had zero go to actual stop loss. We had a few technical losses, which I'm going to post here in the chat. One was Near Protocol that had like a 7% potential losses due to the big Bitcoin news, dropped the whole market. DWAC, we had a 3% potential loss, once again not your play, and same with Spirit Airlines, another 7% potential loss, not your play. But all in all, we're looking pretty good. So I want to ask you, I mean, obviously, we're going to get into TKO, we're going to get into McDonald's, we're going to get into the ones that we had the success with, and see, what you're looking at prior, when you made these entries, and then, how it played out, and just talk about that. But I want to talk about some of the current plays that are near entry, near actually both bullish and bearish entries, and just kind of get your current analysis on these, because these are ones we talked about earlier. I'll let you pick which one. We have Costco, Uber, and Disney are three of the main ones. Are all near both a bullish and a bearish thesis point. And so I'm just curious what I know Disney, you're gonna say
it's a difficult one, bro. It's a difficult one, man. Like I've played it twice and I got stopped out twice. And I've been very much full disclosure. I don't play all of these equities myself, but the Disney thing, and I would say most of them I do. Some of these that you bring to me, I'm like, bro, this is way too expensive of a stock, or I'm not interested in this 5% move. But Disney is one that personally bit me twice. And again, nobody is perfect, right? We can all get it wrong. And the worst part about Disney is that I have a very strong intuition that I will be right. And I'm gonna play that a third time, and I'm gonna play that a third time from here when I really am like super convinced that well everything makes sense, and I'm gonna take that. So I'm not gonna give premeditated levels. I really want to go to the charts and see myself when those levels then hit. I will give you the levels again. I will go to Disney, but just saying, right? So you can be wrong twice and still eventually end up being essentially right if you cut your losses short and then eventually you're in it for a bigger move. So again, I understand that everybody is bullish here. I've seen the Quench stream, right? We all watched the Quench stream. So do I, and I believe he put on his stocks buddy. So I do want to do that as well. Right? That is something that didn't come with all the charting sessions, right? Stocks buddy, but that is something that I'll put on just for reference. So that actually did give a bull signal a couple of weeks ago, and it did fade that. And well, stocks buddy got the best of me there. At this point, look, I'm looking to go short on this, right? It's already established that my goal with this, right, is at some point we're going to see a day and that $79 is going to break and we're going to go lower, and it's hopefully not going to be pretty to the downside then for the bulls. So at this point, the way that I think about the market is simple, right? So I'm asking myself right now, where are other bears also wrong? So I'm trying to cut my position early. I'm thinking, yeah, there's a chance that this actually squeezes higher, and I don't want to be in it for the risk, right? I don't want to be in it for right above $100, and I understand that people with the same conviction will still have stops above that. So the only thing that I'm really doing here for Disney is I'm going to keep this as simple as it can possibly be. I'm going to draw 3 horizontal lines on these 3 swing highs. Those 3 swing highs are levels where people that are too stubborn to take their loss are going to keep their stop. That is where I want to see them get stopped out, and that is where I want to see a bearish reaction from. The higher, the better. Again, if you want to be bullish and price goes down and all of a sudden you're less bullish, that makes less sense to me. Like the lower it goes, the better, right? The bigger return is from the lower you go long from. Well, the better return here is going to be if Disney can squeeze as high as possible. And just so for reference, right, I believe there is a chance that we make it there. So there's a long to take to these positions. But I'm not going to do that. I will focus on other things that I believe are more probable because I see no guarantee even that it comes there. So I'm planning for this. And if it sets up, I'll short. But I'm also willing to essentially go short if the local market structure here breaks. So essentially this move, right? I really want you guys to follow along with me here in the thought process. And this thought process, again, I was wrong twice in Disney. I'll be the first to admit it. But I'm more right more often doing exactly this on other tickers. So I'm just looking, swing low, swing high, swing low, swing high, swing low. Anything here is still very much a lower high in comparison to that high, which is the main reference point. This is the previous lower low, that's the previous lower high, and that lower high brought us to this lower low. So again, anything here, and I will move away all my lines, but just to make it visual, anything here is still a lower high up to my mind, right? And I understand that there's a falling wedge in the breakout, and again, that's not what I'm looking to do because these retail patterns, they often end up being broken to the downside and violently. And PayPal is a very good example of one that has painted a lot of retail traps. And essentially, there's no trap. The only thing that is there is lower lows and lower highs. So it's a downtrend, and people call it a bullish pattern. So that's also, again, to come back to patterns, that's my main problem with this. If you, and I'm not going to draw it nicely here, but if you draw a falling wedge here, what you're essentially doing with your pattern is you're betting against the trend because it's still lower lows and lower highs, and that typically does not work out very much. Sometimes that works out and you get back to where, well, to the top of the wedge. So that would be a target if you're long, but that is to me where I would be looking to essentially fade it from any of the 3 levels. Now, if it gets above that, I mean, then I would say, well, this is probably then going for the highs again, right? So I can still get, if I really wanted at some point, I could still get a 50-60% move of it to the highs and then higher, right? But I'm not convinced anything below even that high is not convincing to me. So essentially what I'm looking to do is very simple: gets above, typical over, back under, gets back under, short, write it back down, stop on the high. And that will be my last attempt on Disney, right? I'm not going to try it more than 3 times, but if I can try it 3 times and I can stop out twice for a modest loss and get it right once, that's all that matters. 33% win rate with a profitable P&L, that is what you want to aim for. Not in the sense that you want to only have 1 out of 3 trades right. Ideally, you have more right, but you want to aim for the possibility of being wrong twice out of 3 trades and still being profitable. If you can figure that out, then you're well on your way. But it comes also with discipline, because you can't keep trying. At some point, you have to be willing to say, I'm not going to impose my will here on the market. Move away from this stock. But it's not quite yet. Also because I have not taken big losses on this, right? I've pretty well managed my position. I got out in time, and I was realistic with my initial sizing here because we were holding that support. And my whole idea was actually, well, as I'm in it and as this breaks down, I'm going to scale this up. As people are going to take profit on their short and they're going to think that support holds again, I'll short the breakdown and the retest from that, and I'll add size for lower. Right? I'm still thinking that is the most likely outcome, even though, and again, Stocks Buddy shows here a weekly buy signal. So again, I fade that, and I have troubles with fading that. But Stocks Buddy, I would say, does not understand liquidity as well as if you were to trade from my perspective, which is essentially trading based on liquidity, right? Everything has its flaws, and this is a really great tool, and I completely use it myself. And I do not say that because it's our thing. I actually do, right? On the weekly.
We're not going to talk at our ass. I mean,
But
at the end of the day, it's still just an indicator. Like, we're not going
it's
to
just an
pretend.
indicator.
Yeah.
It's for me, if you were to tell me, I can either play from just candlesticks, or I can use that. I'll choose the candlesticks and the idea of looking for a deviation and then getting back below. And it's going to be a matter here of not shorting this thing on the way up, because I don't know if it's going to stop here. Nobody knows, right? If it does not stop there, there's a $15 move. And yes, if you're bullish, and probably Quench is going to be screaming it, he's going to be taking profits. But as he's going to be taking profits, probably at the same levels that everybody will be taking their profits, I'll look for the other move, the other direction. And I mean, the bigger picture is that 79 is must hold. And if that flips into resistance, I mean, it's very likely coming back down. And again, I want to make this, people think that I'm bearish on Disney for no apparent reason, that for some reason, I have something against the company. Believe me or not, but that's actually not the case, right? I've been to Disneyland, it's a fun time. I see a high, I see a higher low, I see a higher high, then we've tapped that low, so equal kind of lows, and then a higher high. Ever since that higher high, we've not been able to put in a higher low. That is what you want to see for a bullish chart, and there's plenty of examples that very nicely make a higher low, a higher high, then they make a higher low, and then eventually they go back up. This right here is not bullish. The fact that we've gone from that high to this low is not bullish, because it means that anything up here can still be a lower high and come back down. So if I'm looking at some charts that are up only and that really are having a bullish market structure, this is broken to me, this market structure. There is something about this chart that is not on other charts that essentially respect their higher lows and their higher highs. So I think this is a very precarious chart with a good long-term outlook to go short. And then if this all breaks down, that's the part of, well, your cycle on Disney, where people are going to be selling it for low prices. And eventually, also, believe it or not, that I will long that. It's not that I have, again, anything against it. I don't think that a long is going to take me as far as I need it to take me for at least a long-term hold or a swing trade. It's too risky here, especially with the lower high still. Now, one thing that I will add to all of this is that this low is super important right now. So I was saying I'm willing to go short if it breaks local market structure. It's going to break local market structure the moment it gets below 88.69. Right? If I were to add in StocksBuddy, and this is again a very good application of it, it actually, that blue line that StocksBuddy shows you, right? That blue line, it shows you essentially where market structure shifts from low, high, higher, low, and higher, high to low, high, higher, low. But then you break that, and you basically have a lower high and a lower low then at that point. So if it breaks that, that is also when StocksBuddy is going to basically start flashing bearish. That is a confirmation that I will also take, and then I don't require price to trade higher. If it can trade below this, I will also take it.
That higher level, what was that actual price level? The higher one that you're talking about, like the first one.
Let me go back a little bit here because I had all the levels drawn in the charts.
Oh, yeah, you can do that. You can go back.
Actually, I should have just drawn them. It is because I can draw it again. If you can only draw it once, it's probably not the right level. So it's that one, it's this one, and it's exactly the wick, right? I'm not looking at the candlestick bodies. I'm looking at the wick because it's above the wick that you find liquidity. It's also here, like if you take it from your candlestick body, then you could say, well, it's wicking from it, and you go up, and this is the rally back up. And everybody who, again, this is also the perspective that this thing then indeed rallies up significant percentages and then it makes a lower low. So I'm taking it from the wicks. But yeah, that's 103.91 here.
103.91.
Give me a squeeze above 103.91 and then a 4 hour back below. I'll give it a go. That's my idea.
Gotcha. I'm just writing down the notes here. Does anyone have any questions on Disney before we move on? Because I know that is one that we've had a few people talking about on different bullish and bearish theses. The next one I do want to ask you about, Jay, is it'll be up to you, either Costco or Uber. These are both ones that are close to, once again, same deal, either both bullish and bearish thesis.
This is one that I'm not playing also on my personal account. So I've also said that to you, right? And the reason why is because it's the same with NVIDIA. I mean, I do prefer playing some stocks that are more affordable than that, especially because I'm not the options guy. So, some people, again, like SLP will go in here and will buy 10,000 shares or whatever, stupid amount. But that's not quite where I'm at yet. So I can be humble with it, and I'm letting this run. But I think this is also, I'll just marked out these fibs, right? So we made it to the 1272, and actually something's happening here. That's interesting, right? On the 4 hour, let's see, regular trading hours. So let's see, we got above that 1272 briefly here, but just with a wick. Now we really got above it. I would say that looks like a bull trap, and yeah, that 4 hour candle here, that's your short entry for this thing. So
you're saying it currently already happened, you're saying, right?
Yeah, that already happened. Perfect. On the previous
Good.
4 hour candlestick. That's your short. So it gets above that. Then this is exactly the kind of thing that you want to see from a 1272 like this. Let's see, actually on a 4 hour, yeah, I mean, that's fine. Stop on the high, but you're playing back down to the swing low. That's fine. That it can really take. And this is something that, look, I have not put any indicators on this, right? I haven't. I am 90% sure that this, if I just put in an RSI in this, it's probably going to tell me bearish divergence as well. Bearish divergence from high time frame resistance based on fibs. You got above, back below. That is a very nice setup, actually. And that is something that I would not be longing into. Look at this, right? Right. So the high here makes a high on the RSI at 85.82, comes down, goes back up.
How did you figure that without the RSI being on there?
It's magic, bro. I've seen so many charts.
All right, that's going to be a lifetime masterclass. That's the stage 2 for our chart. That's because we do have plans for the next step of our charting master course.
The funny part is that I actually don't need to put an RSI in it to understand where it's probably at. And it's not like I'm doing the calculations in my head, right? It's just I understand how I just have seen it so many times, bro.
Wow. That was impressive.
Watch this.
Like, wow, so I'll do it again.
Yeah.
So you're
So
saying a bull? You
this
said it was
is,
a bull trap short entry was hit, right?
yeah, yeah.
Perfect. So cost that high.
Smash back down. And if you're wrong, you're wrong above that high, because if you're above that high, right? And this is also trading psychology. You'll then sometimes stake this position, right? And then what's going to happen is exactly this. Whoop, and then back down. So it's going to stop you out, and then it's going to smash back down. And then you're going to think to yourself, my stop loss was not placed well. Look, there's two things that you can do. First and foremost, I would say, you can't bank on this happening, because if you do put your stop loss higher and that level is just indeed broken, flips quickly into support and does something like that, you're very much trapped in a short. There's one more thing that you can do, and it's actually, again, with an indicator. I think we went over this in the charting class as well, but it's good to reiterate it maybe, right? If you use the average true range ATR, right? You put that on, you see this 4-hour candlestick here, right? That one where you got your entry on, where the criteria aligned for our trading strategy to take a short position, right? And hover over that, and on the ATR, you get a number, which is 5.85, right? Well, what you could do is, instead of putting your stop on that high, so that is, let's quickly take a calculator. The high there is 698.65. So 698.65, right? That's the high. If you're experiencing for your own trading, then in a setup like this, you're getting stopped out. What you can do is use the ATR, and again, look at the value that it gives you on the candlestick where you take your entry. So on the candlestick where you take your entry, it shows you 5.85, right? You're going to go to your calculator and you're going to add 5.85. That is going to give you 704.5. Now, I'm not saying go do this. I'm saying stop on the high, but I'm also saying you could do that, right? So 704, and basically what you're doing on the candle that you take an entry, the ATR is telling you, again, you don't have to go into the depths of all these indicators. It's truly not important, but it's showing you kind of the average candle size. That would account for to be expected volatility. That would mean that, well, the premise is with this kind of stop loss adjustment, if you put it higher, so in this case, it would be 704.5, you would account for a little bit of volatility. And what would that then save you from? If you have your stop loss, it would save you from the scenario where it actually goes, wicks you out, then everybody buys the breakout, and it still eventually ends up reversing. So with a wider stop loss, does that mean that you're going to risk more on your account when you trade this position? Answer, no. Reason, because if you apply the wider stop loss, you're going to enter with less shares or with less contracts if you're playing options, right? So that is one way to adjust your stop loss to account for a little bit of volatility at the high. But again, that doesn't mean that you're risking more in your account, because you can, again, people get it wrong in the sense that they think that the distance of their stop loss is the risk on their account. That's not at all the case, right? You can have a 1% risk if you put on a trade with a 20% stop loss. Go figure, right? The only thing that you have to do essentially for risk management is you look at this stop loss, right? So for example, and this is important, that you know where you're entering, you have your plan, you know the distance and percentages of that stop loss. So that's 3.78%, right? So suppose you go in here and you go in with your full size and you stop out, that's 3.78% of your account. Well, if you only want to risk 1%, you divide 100 by that percentage, which is 3.78. And that is going to tell you essentially the percentage of your portfolio that you can enter this position with, such that if you get stopped out, you risk 1%. So again, this ATR method is not a method to increase your risk, even though it sets the stop loss higher on a short or lower on a long. Again, that does not mean that you're risking more. That also means, of course, that if it moves back down, you will be in with less shares, but just something for you guys to practice, right? I very much am of the opinion that I want to hold absolutely nothing from you guys. You can know exactly what I'm looking at, right? karma is a very real thing. So I hope that you all take this advice to heart and go play with it. So use these indicators to your advantage. Don't be a slave of them. Like the RSI couldn't tell me anything that I didn't already know, right? That's proven. And the ATR can also go. So just for your stop loss adjustment, if you want to take that route, but generally speaking, the direction is down and smash. Smash it. So I hope that's a little bit helpful. I know that that's not only going over our positions, but I still feel like information like that is valuable.
no,
should get people in the Discord. I mean, bro, this is information that it's helpful.
No, this is part, like the half of this is about the stream is about going to plays. The other half, of course, is about the technical analysis education. Yep. I have one more stock for you that is the currently near entry. There, all the rest are either up or not currently at the entry level. So I don't want to go over those ones unless you personally do. I know there's something that you want to go over as well at the end of this, but American Airlines Meta.
I even forgot what I wanted to go. Yeah, I do remember. Yeah, absolutely.
Yeah, perfect. we're currently up on American Airlines Meta and Planet Fitness, but Uber is the last one I want to go over. Uber is the one that's close to both of our bullish and bearish thesis. I want to get your current take on that one.
Costco is clear. Yeah, and Uber was your next one, right? Let's take a look at Uber here. Let's go to. Let me actually put this off. Don't really need it right now. Most of these positions, I'm again also playing very much with my own monies, especially the one that I want to show you guys here on the last one. That is something that I'm personally allocated and expecting to do well. And so I definitely also want to go over that. But Uber, I'm
glad you remember. I'm glad you remembered what it was. So I said it. And I was like, I actually don't remember. I'm really hope he did.
Yeah, let's see for Uber. So we have quite generous target to the upside there, right? That's 88. That's your all-time high breakout target. Let's see where we're currently at though. 65.79. Let's see on a 4 hour. So session, let's see extended trading hours here. Let's see. So for reference, we're now above the all-time high. We've made a high. We've pretty much flipped that into support, and we're now here. You tell me again what the entry was, bro. Genuinely can't remember this.
For yours, we had one option. This is why I want to ask you about it, because currently it is at same thing with Costco and Disney. They're at like both the bullish and bearish entry points. In theory, both have been hit. So I want to get your thesis. 6405 though. 6405.
I understand. Yeah, that's 6405. I mean, at this point, right? Just from the reference from what we have right now, we're above it. So if you're short, it's extremely risky. Because again, this is all-time high territory. We've just broken an all-time high, and crypto or stock, you want to do what we've just done on Costco, which is you want to see that go to a relevant fit level. You want to see it go above and then get back below. But here we're very far off that, so that means that there's a ton of risk for shorts. I would say one thing, like at this point, if it gets at this point back below 6405, then I would say this then likely becomes a short-term deviation above that. And then we can take a look at playing this back down. So if you want to short this, again, typically, right, on 99% of these things, you ask me what is the update, and I give you the exact levels that I was thinking about. But for this one, right, even if I said something different, which I hope I didn't, but I would wait for this point, for this thing to get back below 6405. You don't short this here. In terms of longs, right?
Yeah, what about bullish outlook? Because this is exactly what I want to ask you about. And I'm probably going to ask you again next Thursday about this one if it's still at that level. It's just,
I mean, I want to go for a second to the regular trading hours again. So I want to see. Right? Just compare this for a second.
I'm not gonna lie, this has helped me a lot with the Costco and the Disney, now the Uber analysis, like getting like, because these are both, all three of them are just ones that are very close to both bullish and bearish. So I want to see your current takes. I know we had the blog out like a month or so ago.
Let's see if price. So now we have a little bit of a, well, the last candlestick. This one is a little red one. I would like to see this thing come back down and test 65.14. And this is something that, well, we're going to play a lower time frame on this. So a move below 65.14 and then a 15-minute candle close back above with a stop loss. Let's see.
Ooh, we're doing a little bullish trade inside the bullish trade.
Maybe you can work like that, bro. But because
but tradeception.
I understand that big ass 4-hour candle that started here, like this one, right? This big.
That's what I was worried, because it's just a big ass candle. I'm like, that's not. We need more than that.
That's also a bullish entry right there with a stop loss under these lows and just ride it up, right? A Pookie special. I very much agree with that, and I think that's exactly actually what I've said.
Well, that is your entry. Like, so technically, we did already hit the bulls entry of yours when that happened.
So again, it's very much then I am getting to the right point where I said you don't short it here.
No, that's pretty much what I'm asking. That's why I need to know, because we had that one short option. I was like, should I tell them not to do that? And I was not tell them, obviously. But
shorts on Uber, you wait for this thing to get back below the previous all-time high, and then you contextualize, and then at that point you will say double top below the previous all-time high. We take it down significantly, probably to the low 60s at the very least, and then back into the 50s. That would be the bearish outlook, which is, again, it's possible, right? If this thing gets below 64.05 again, it's probably not going to look short-term very amazing for that. In the bigger picture, I'm very bullish on this, man. And so indeed, currently, if from a 4-hour time frame perspective, right, you could say, well, the moment it breaks above that and it's wicked above it, you could have taken just an entry on that previous all-time high, bullish, or even on the 4-hour candle close here. But if you want to look lower time frame, which again, you can do a bullish play within a bullish play, but maybe just on the lower time frames here tomorrow. Let's see this thing get below 65.14 and then close a 15-minute back above. Stop loss. So let's see it. So below 65.14, then closing back above. Our stop loss can be, let's do 64.65, and let's aim for a healthy 66.45. So this is your mini bullish play within the bigger bullish play, where the bigger bullish play, if you're just having Uber, like, again, not financial advice, but if you have it in your portfolio, this is not where I'm taking profit. Why? Because it's breaking all-time highs. It's still very much structurally okay. And man, if this runs into the 70s and then it runs into the 80s, you're going to regret it, right? So I'm bullish on this overall until it gets back below that 64.05. Then short to midterm bearish, but bigger picture still bullish. I hope that answers questions, bro.
Yeah. Can I ask you one more, actually? So I just realized there is
one. You can
one.
ask me two more, bro.
I got one more in me, and then we'll let the audience see if they have anything they want to ask you.
All right,
where stocks go. But
yeah,
because everything else right now is very definitively either hit bullish entry or hit bearish entry, is either above or below, which is perfect.
Yeah, like most of these things are very black and white, right? The previous one, Costco, I mean, that was an obvious above, back below deviation, back inside, level to level, and smash it back down. I mean, and you guys see, I'm very happy and proud that it really does make me proud to first do the classes and then to see, like, all these plays, like it's just from what I've told you guys, right? And then we play it together. So what's the next one, bro?
So Intel just
dude, I just went over this
I know. I want to
see
what because currently your outlook, obviously, after the big, we have this one level. It's what's that currently at right now? Hold on. Intel high NTC is at 44.28, so are currently near our 43.30 level. I'm curious what you think about that.
Look, watch this, bro. Watch this red canvas. So you're chilling here today, right? And 3:55, 5 minutes before the close, you're chilling. You're sitting there at 49. Who thinks that in the next 5-minute candle, you're going to come where? Like, where does that hit? That was a crazy little already like proof that that's an important level. I mean, at this point, if we're waiting for 4-hour candles closes back above, then, and again, those 4-hour candle closes back above, I really want to see that on a regular trading session. So I do have to, I want to be on after hours here to show the big red candle, but I want to also emphasize that these positions that I'm suggesting that those are taken on 4-hour candle closes within the regular trading session, right? Very normal, straightforward, when everybody can see the chart, can enter their positions. So I don't know what levels I gave you, but that 43.31, right? That is the high from this week, right? If that breaks 38.99, if that breaks 36.38, entry criteria, move below, 4-hour candle close back above during regular trading session, long, stop under the low, target 2R, back up, right? Below, don't do anything, 4-hour back above, up. Doesn't happen from here, then it happens from lower, that's fine. Again, the lower this goes, the better you're off really building a position. It
And
has
what
a lot of
what are those levels? I'm sorry, I can't see them. Can you just
it's
write them down?
43.31, so 43.31. Then we have 38.99.
38.99.
And then we have 36.38.
36.38.
And I mean, that should be enough for now. I mean, if we're going to get back below all of that, then we're probably not going to get triggered into a bullish position. And then we could say in the bigger picture, that's not going to look.
And those levels are for bullish, right? Those are for break below, for close above, bullish entry.
Yes.
Criteria or level.
I mean, for shorts, the reality is that you're a little bit late to the party, and you'll anyways have to wait for a move back up. But I'm not interested to short this year, especially after it's coming down to levels that I'm looking at bullish entries from. So let's just keep it bullishly biased. Again, like counterintuitive, right? Thing nukes down, everybody craps their pants, so to speak. But the way that I would again contextualize that is that is an opportunity. At least it's a potential opportunity, right? Those are untested levels from fair value gaps. So the first time you come there, you're very likely going to see, well, either the entry criteria meet up or not, right? So I would, and this is very much within my own book, $40 stock. Get some shares of that for sure.
Yeah, this is an interesting one because, I think we posted the blog about this just the other day, and with the earnings coming out, of course, this is not, we don't just post the plays and then just say good luck. In that INT channel in the Discord, I posted, hey, there's earnings coming up. Our bulls entry, because we did have a $449 bulls entry, did get hit, but it was very, very, very much posted and obviously not advised, but suggested that either don't take it until after earnings, or stop at break even, or some type of risk management to make sure that you don't get caught, and will end up being a very big red candle, which was funny. The red candle went right to your entry, your other level interest too.
How is it possible, bro? Let me ask you a question. How is it possible that I tell you 43.3 weeks ago, and then on exact earnings minute, it hits that, it wicks from that? That is because these levels are important.
Right? That happened with Google and McDonald's. Literally, there was bad news that came out. This, that, whatever. Whatever happened, it went down. It went Google especially went down right back to 135, and then bounced back off and hit both your targets. It was crazy. That was wild.
Beauty here as well, right? And
that was a perfect trade.
What was the idea on Google the whole way? The only thing that I've really done for Google is say to myself, this is bullish, and that's probably going to the all-time high. Investment trading thesis done, bias done. The idea is you're going to hit the all-time high. Where does it go to the all-time high? Where does it go next? Well, some would say where we are going, we won't be needing charts, but I would imagine 178 and then 219 would be very good levels to look at. For continuation, so this is just bullish. I mean, if you're in a position as suggested from below, right, at 135, that's when you get interested. It literally broke above 135, came back down, respected it, and absolutely just catapulted, right, without any troubles, all the way to the all-time high. I mean, even if you have your whole trade is already secured and paid for, even if you have just 10% of your shares left, I mean, if that runs another, let's see, and again, for that share, there's zero stress, or for your 10% that is less, there is zero stress. But if that runs you another 17%, and you leave your runners running, like that is also such a cliche, right? Like leave your runners running, wait for confirmation. What does it mean? It means that you don't do anything with it, right? That is what it means. It means that you take profit at these higher levels. That is what a runner is designed for, at least in my book. Or it comes back down and stops me at break even or something, and it's anyways not important. The position is already paid for, but I mean, it's free. It's also a form of passive income. Literally, it's runners on positions. People then say like, or they look at a position and they're like, yeah, there's not a lot of in here anymore. It's only like 5 shares left. Let me just close it. I mean, what are you doing? Like you're in all the control. It's a free position. If you just let it sit there and it runs 20% higher, and that happens to a couple of your positions, I mean, that is all free monies. So
this takes the risk out at that point.
Again, what does it mean, a runner? I mean, very simple, right? 10%, something like that, where your whole trade is already done. You're not greedy, right? You're not saying, 50% of this position is going to run way higher. No, that becomes risky then. That becomes gambling. But with a small part of your position, I mean, it doesn't hurt to just leave it on there, right? Especially once again in a context of all-time highs. I think this thing it's more likely to go to 178 than it is not at this point.
Jay, I know you said that you had something you want to go over, but before we do that, just really quick, I wanted to let everyone know that we did just recently post a blog on the DXY, DXY United States Dollar Index. Next blog, we'll be getting into some fun stuff that Jay, I'm actually personally excited about. I know Jay's very excited about, and that's the Forex currency pairs. We'll be talking about commodities as well.
I've been trading some USD Canadian this weekend. Last week has been fun, man. Like it's a nice something different than always the same boomer stocks.
Boomer stocks, as you call them, yes. Man. Well, we have a lot of current. I have 20. I have too many stocks on my watch list, right? I have 28, as you call them, boomer stocks from these trades on the watch list.
Check the watch list out here, dude. This is what we wake up to in the morning. Go figure. let's start scanning.
But no, we're gonna be switching up a little bit for this next 3 or 4 or 5 blogs or so, and and obviously for now, for the next 3 or 4 or 5 blogs, will be a little bit based on the Forex stuff. We'll be talking about currency pairs, how that works, kind of breaking down each of the different currencies. Only stock you need is Uber, yeah. It does help to have 1 or 2 or 3 things, but the main thing is for me, when I was only trading Uber, because I understood Uber. And that's why we're, with these blogs, we're not only giving out trade ideas, we're also giving out detailed explanations of how it works. For instance, Jay gave a Bitcoin trade idea, and we also broke down exactly how the Bitcoin halving works, how the rewards works, how the supply works, whether or not there is a unlimited supply of Bitcoin, what the exact supply is, how that all works. We went over the origin of Bitcoin. We went over how the ETF works and the impacts on that. We're not just giving you blind trade ideas. We're also giving you the access to the due diligence and the ways for you to understand exactly what you're investing into, because when you invest into either stocks, crypto, Forex, commodities, futures, whatever it may be, your goal is to make money. Your goal is to sell it for higher than it was when you bought it, and you can't do that if you don't understand what you're buying, whether it is from a technical, fundamental spot point of view, whatever it may be. So these blogs are meant to give you kind of both a point of view of what's going on in the world around these publicly traded companies, or Forex, or commodities, or crypto, and then also giving you levels that Jay charts out using a strategy that we not only teach here, but we also teach it here right in this channel right here in the premium charting master course, that 8-week course. So now not only do you have these trades, you also now understand how to take them, because we have 8 very detailed courses going over exactly how Jay goes about finding these classes. But next blog is coming up will be about the currency pairs. We'll be going over the euro in particular. One after that will be going over the Canadian currency. And it's kind of just going over all that stuff. Like I said before, the recent one is about the DXY, the DXY. We not only go over why that's important for Forex traders, but also why the DXY, which is important for stock traders, for crypto traders, for all traders, because it talks about the US dollar, which everyone uses the US dollar, when it comes to trading, and there's a very big effect on the economy as a whole. When the US dollar is strong versus when it's weak, and we go over how to read the Dixie, and what over 100 means, what under 100 means, why 100 is so important. So definitely be sure to check out those blog posts. Not only do they give you trade ideas where you can, as you can see, hopefully make some bread on. Obviously, not financial advice, but we're up. Our low P&L is at 145% with these trades. The high ones at around I think it was, I had to look up on the blog again, but it was something ridiculous. I think you put $1,000 in each of these trades and you held all those runners, as Jay says. You're looking at like a $7,000 return according to the stats. But obviously, that's neither here nor there. All this is dumb numbers, but
exactly. I mean, that's not realistic.
It doesn't matter. Yeah, exactly.
You wouldn't get that.
Stupid statistics.
You wouldn't get that, but realistically,
I don't care about win rates. A group tells you, oh, look at me, with this indicator, with this, with these alerts, I made 90%. Great. Let me see how much your members are actually on me. So exactly. For me, it's less about, how much we could possibly make. Our goal is to is to see y'all, posting these profits and, making money with us. So, however we can help y'all do that, with these blog trades. I know, right now we're updating them, with entries, with exits, whole 9 yards. If we can do anything to make it easier, we have these streams, definitely let us know, because we want you to be taking these trades. As Google, I'm telling you, like I did the options, I did the day trading options with the expiration this Friday. I did the whole, long-term investing, letting your $10 turn to $20 over 3 months, whatever. I did all that, but this strategy is like a very nice in between where you're kind of just sitting on your hands, but you're actually making some pretty good profits. You're not just making that 10% this, you're making some really good profits over time, and it's very easy. Google was such an easy trade. McDonald's is an easy trade. TKO, just buying and just sitting on your hands for a month and just letting it just do its thing, basically. Based off of high conviction technical analysis, by Jay. So Jay, anything else from you before we close at the stream portion and get to the other portion?
Yeah, actually not too much, man. I will be joining you after the stream as well, but I gotta go and quickly get some food as well, bro.
Yeah.
So, let's maybe round up the stream here, and we'll go over all of these things in our blogs. We'll get to everything. Yeah. But for now, I think that was hopefully enough.
Yeah, I'm looking forward to doing the diving into Forex with you. I'm going to be learning a lot myself. So for those of you who are already checking out the blog, it's blog.pbalerts.com, and we will see you. We have a 9 p.m. Eastern stream coming up with Ethan. And then tomorrow we have bright and early with Pookie, some live trading if he's feeling up to it. But for those of you who are watching live, we will be sticking around here after the fact. We're just ending the stream portion, the YouTube portion. So for those of you watching on YouTube, we'll see you at the next stream. Until then, we hope that you all make some bread.